Following of TFN live at TFNN, the Power Trading Hour with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
17th on this day in 1885. This dismantled State of Liberty statue, a gift of friendship from the people of France to the people of America, arrives in New York Harbor after being shipped across the Atlantic Ocean in 350 individual pieces packed in more than 200 cases. And we had nowhere to put it, and a lot of people thought that we should throw it back in the ocean. Thank God didn't. And I've been there several times. Always neat to watch it when you're flying in. To New York and flying up the Hudson and being able to look back and see it. It's always able to represent your country. And it's just one of ours, but kind of a nice one. What do we have going on in the stock market today? Well, we had a little pop, no volume to really speak of for the last 2 hours. We're at 1642 on the S&P cash, up about 16 points on the S&P. But right now, less than 1.9 billion shares. It looks like we're really getting into summer trading, where Fridays and Mondays are going to be very, very light. What can we really pull back from this? I think we've got just one more push in the currencies out here. It will probably happen. It's a two-day event this week for the Fed meeting. Talking early Wednesday afternoon to see what they say. Everybody, I think, is trying to push this market up a little higher than it wants to be. And I think we're probably going to have a lot of action and a good move, probably 40, 50 point swing, I would suspect, by Wednesday if we don't get it before then. The market wants to be right now probably 1625 or so, and any movement driven by news. I just think we're up about 15, 16 points that had a lot more to do with the Fed or the Treasury or someone intervening because of the weakness in Japan. They wanted to hold our market up. I think eventually that will fail. The last twig will put on the back of the camel. It will snap, and that will be it. But just not a whole lot of movement out here. It's starting to sell off a little, but I think a lot of that just was them trying to push this market up. I would not be surprised to see us close back out here at 1636 today, which would be right at what support and resistance was. Like I said, I suspect that we want to get down a little bit farther out here before the announcement on Wednesday over the course of this hour. Techno 3 each trading day. In the news today, it's Boeing. The big air show is over in Europe each time this time each year. And Boeing over the weekend kind of came out and said that they had a new longer 787 and had already collected 100 orders for it. Of course, at the same time, or going into Friday, they wanted to get the first launch of the Airbus version of the 787, at least in the air. You still have another year to year and a half before the thing, or after the thing gets in the air, till you actually get people in the seats, or maybe even 2 years to go through certification tests. They may try to push that a little faster. I don't see all the issue with buying the Airbus, and I have a feeling that a lot of those orders are probably from companies in Europe who will cancel them later at no penalty, just to make Airbus look good. Of course, almost all those Airbuses will come with the engines from what's the car company that's got the most expensive cars, the Bentleys and the I'll think of it in a minute. Anyway, the big jet engine company from England, but they don't have anything approaching what the GE engines have, or even close to having with fuel efficiency. So my guess is even if they do start selling a lot of the Airbus, a new Airbus version to compete with Boeing, it's still going to end up with the GE engines on it, which are pretty good. Thanks, Diane and Dan. Rolls-Royce. For the reason I can think of all the cars, but I couldn't think of the name of the actual company. The Rolls-Royce engines are good, but the GE basically designed a lot of the engines for the new fighters over the last 5 years. That technology has been put into their regular engines, and no one can come anywhere close. I think Airbus can probably make carbon fiber panels as well as maybe Boeing can, and reduce the actual weight. But it's going to be, I suspect, almost impossible for Rolls to figure out what GE learned from a lot of money going into it from the arms part of their business, and building these new Super Cruise jet engines. But there's a lot of stuff that goes in them. But it's going to be awful tough for Boeing to not be in the cat's bird seat and GE to be in the engine seat, I suspect, over the next 5-10 years. They'll still continue to buy Airbuses just so Boeing isn't a single source and they've got something to fly if one or the other has problems. But also a lot of these places have to buy Airbuses or they'll get X'd out, especially if they fly out of Europe. But we'll take a little bit bigger look at this maybe on Friday. Tesla, boy, I tell you what, it's not a day that doesn't come out that we get one more phony weasel pushing a Tesla out here. It's kind of interesting, but I think at the same time, good for us that we'll be able to wait. TSLA, another dubious quality analyst out pushing a Tesla. Of course, they don't talk about how many years of this growth it would have to have just to actually make it to the price point that they're at now. They're up, $4 or something. And what did they have today? They were up at almost 90. Is that right? Maybe, I thought that they were higher out here. Hang on a second. There it is. I don't know why my machine here just decided to give me a $6 lower quote on Tesla. But anyway, it's at 103.35, and it was as high as 104.75 today. So still in the upper range, up 3% today. But again, continuing to watch all these companies with a super high short interest rate to be consistently pushed and prodded by the trolls of Wall Street, far beyond any kind of price point that they should be trading at. And I think a good idea is when we start seeing these really sold hard that even the last short squeeze artist on Wall Street will say that the market's over. So I'm looking at these stocks like Tesla, like Netflix, that are pushed up way in advance of anything that they could do in the next 10 years to justify today's stock price. I'm figuring 10 years is probably a good range out here. And Tesla, a lot of problems. Netflix, primarily one, and that is that they are not telling us what the cost of what they're doing is going to be. Tesla is fairly easy to figure out. They have a model that will not last very long, and once they have to start splitting those profits and gross profits with actual dealers in the field, which will probably be in the next year, that will be the idea that Tesla will probably come back down to earth also. But it's definitely the pie in the sky company of 2013. We talked a little bit last week, and some of the people in the den posted some links actually to the lending rates that banks are charging each other in China right now. From Charlene Chu, who's a leading analyst from Fitch. She's looked into the shadow banking system of China. She says that in the last 3 years, the amount of loans back and forth to these banks has risen from $9 trillion to $23 trillion in about 3 years. So to give you an idea, they've taken on pretty much everything that we have over just the last couple of years. So she suspects that that when that blows up, and she thinks it's very near, probably over the summer, especially when we started seeing those huge interbank lending rate levels jump 1, 2, 3% in a matter of days. China has a big enough fire hose of money themselves to probably go ahead and put some of this out, but my guess is that they have no real capability, since they haven't done before, kind of like us reacting in 2000 and 2007 and 2008 to the Lehman Brothers thing. The first thing they did was let Lehman Brothers fall, and it led to the basically the fall of almost all the banks. She suspects that basically the same thing is setting up. So be very careful out there and see what's going on. Tesla, China syndrome. IPOs this week. Retina Therapeutics, which is going to be PetX, developing medications for cats and dogs, coming out this week. Going to be about $11 to $13 on it. PetX is going to be the symbol. Bluebird Bio, which is developing gene therapies for severe genetic and orphan diseases, plans to raise $75 million. It's going to be 5 million shares at a price range of 14 to 16. Symbol on that's going to be blue this week. GoGo, leading provider of in-flight Wi-Fi on commercial and business jets, plans to raise $176 million, offering 11 million shares, somewhere between 15 and 17 bucks. We also have PTC Therapeutics, PTCT, a biotech firm targeting rare forms of muscular dystrophy and cystic fibrosis, plans to raise $100 million, going to offer 6.9 million shares, somewhere between 13 and 16 bucks. Regato Biosciences, RGDO, which is developing a breakthrough anticoagulant system for cardiovascular surgery, plans to raise $75 million, offering 5 million shares at 14 to 16. So a full plate out here during options expiration week. Not a bad time to go public. They try to keep the market flat, at least for those last couple of days. I suspect you're going to see all these go public on Thursday and Friday. We'll be back in a minute. You can give me a call, 877-927-6648.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We have one last IPO that to add to this week, and this is going to be the big one. It's largest cement producer, 37% of the market share, plans to raise $3.4 billion by offering 200 million shares, somewhere between $15, $59, and $18.51. I bet there's some kind of equivalent in Brazilian money. There's a Brazilian real, I think, isn't it? I don't know. I think I was there once, maybe twice. Can't hardly remember it. Great place to party, by the way. Anyway, VMBM, Victor Edward Baker, what's that? Milo? I'll have to come up with some new words. But anyway, that's going to be going public. I suspect this is on Friday, as they just kind of snuck this one in at the end. But again, you can always give me a call at 877-927-6648. I've got an M as in Mary here. We can vote on these. I kind of like making up my own, though. What else do we have going on in the marketplace today? Wanted to get to what's in play. When we look at gold out there, this thing's kind of, the volatility on it's kind of dying out here. We've got it off, $6 today at 1381. Probably the most interesting move was a nat gas to have it pop up here, and that's just because the heat over the summer has made it to the electrical producers, and they're already having to fire up backup generators for some of the natural gas, which popped it a little. But for the most part, not a lot of change out here. Silver's off 20 cents at 21.74. We've got not a whole lot of movement. Probably the most critical out here to me is that it's not off much, but we still have copper off, and this thing still hasn't made any kind of signal of bottoming. And, of course, what I'm watching at here, at least in the Asian sectors, start figuring out whether or not their market is bottom. The market has been losing steam, as someone just said, in the den for a little while. We've been rolling over. We are now at the support resistance level, and that is 1636. And we're going to probably continue to see a lot of volatility between now and the end of the day, and probably very light volume Tuesday, light volume probably into Wednesday afternoon. So we'll be continuing to monitor it. But like I said, I just didn't see a lot in this. We've got about 2 billion shares so far with an hour and a half left to go in the day. 2 billion shares on the consolidated New York Stock Exchange tape is not this much with an hour and a half left to go. So a very, very light volume pop. We saw the same thing on Friday. And it's, I think, a lot of wishful thinking out here. If we close below 1636, we can probably consider today a false breakout to the top side, and probably going to, I think we're probably going to be in this range, probably 1609 on the downside until the Fed comes out and announces. I suspect he's already seen what everybody else has seen in Asia and doesn't want to get involved in that, and that is some kind of huge bond issue, and that we need to start pulling back a little at this point. Too many bubbles out here, bubbles in the housing, bubbles in the automobile market, and anytime you have subprime loans, I'm going to say we're in for a bubble. We've already seen some of that already. So what else do we have going on? I wanted to get to what's in play here. Get to my nice little list so we can start checking it out. What do I got? Just a minute left. August Golds. See if there's anything else up here. Well, like I said, we were looking at a lot of these NFLX, looking at a lot of these highly shorted stocks popping today. I think it's NFLX. No real, I can say it, it's no surprise, let me put it that way, with unending shills for things like Netflix out here today. It's up, $14, $228.56. I would love for this thing to gap up one more time and get a shot at a 3-gap play. I suspect this thing is headed back to $50 well over time, maybe in a couple of years. Maybe one of the best short setups going to be ever, but we're going to have a lot of patience and wait for this thing to top out.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
I was talking to our engineer slash producer slash phone greeter, Disco Steve, today, and was out running about getting some errands done right before the show, and headed back here and was very pleased to go into Wendy's. Hadn't been in there in probably 6 months or a year. I never went to Wendy's much already because all their Frosties were all chocolate, and I was always a vanilla guy. But maybe that says something about me. But was very pleased they were playing Ray LaMontagne in the store instead of that horrible disco bounce poppy stuff that is probably like on bad AM Mexican radio stations, that kind of just bam, 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 ridiculous bass note, bam, bam, bam at 135 beats per minute, just because apparently that's all people without a brain can think with. But it is that. We've got a phone call. We're going to go to Wayne from Mesquite, Texas. He can't spell other. Besides having bad musical taste, Disco Steve is not real good at spelling either. But it's like he almost spelled Muskrat, Texas here. Oh, it's Al in the store today. Okay, go ahead.
Yeah, I was going to ask you about that Netflix. It looked to me like it got up over 10 points today.
Yeah, it was. I thought it was up 18. So, yeah, it had a nice pop. But what I'm looking for, if we look back on the charts, NFLX, and are you familiar with three-gap play?
No, I've heard you talk about it. I haven't really.
Okay. Well,
I just wanted to short
here's a
Netflix.
great example of this thing. If we can get one more pop in this thing, if you're not watching Tiger TV, you can go to channel 14 later. So about halfway through the show, and look for my chart. But what it is three major gaps, and this is almost perfect the way this thing's setting up. You get three major gaps up, and the first gap we have happened on the 24th of January. And you'll see it there. It was a nice big gap from to close of the day, 103.26 to 146 the next day. The next big gap was on the 22nd of April up to, or is that May? Yeah, April. 22nd gap from 174.37 up to the open was 215 that day. So those huge gaps that you see on those days, we want to see one more kind of like it. And if it does that, the pattern generally is that it will stay up there for a few days. It will start rolling over, fill the first gap, fill the second gap, and go all the way back and fill the third gap. And normally it is fairly fast. If it took us 4 or 5 months to run these up, then it'll come back in probably a third of that time. So maybe 2 months, the whole thing will just collapse. So go ahead.
Well, yeah, the 10 points today or whatever it was, 15, I guess.
Yeah, that's too small. We're really talking. If you look on the charts and stuff, you're going to see that we have some big spreads out here in the $30, $35, $40 range. And that's what I'm looking for. And ideally, that gap would be something like 240 to 290, right? And it just holds up there for a few days and then starts to go back and fill that gap, and then that's it. Because normally you get that gap, you get about 1, 2, 3 days, and then it just starts heading down, heading down, heading down, and everybody wants to get out of the thing, and that's it. And it goes back and fills all three gaps, which would take us back to $100. So, this could be one of those world-class shorts. And I keep hoping that we get one more gap up to get short this thing. Because normally what you're going to do is get every short out of the market on this, and there's nobody to buy it anymore. And then eventually that's when the wheels just fall off the wagon. But, fairly good indication of a parabolic stock. What are you thinking about doing with this? You were thinking about shorting this small gap?
Yeah, I've shorted it a couple times, made a little bit of money on pullback.
Yeah. The big thing is that I like stocks like this because there's a ton of money to be made if you've got the patience. But the thing is, if you're playing it short all the time, unfortunately, that's exactly what everybody else is doing, and that's what sets up the next big, huge move. You've got to get to the point where no short in their right mind wants to be short this thing, and then you short it. And then, of course, there's nobody else out there. You have to literally, almost pee yourself when you pull the trigger on those things, and then you'll know you got it right. But there's been so many of these over time that have played out that way, but it is not one that you see very often. But if you want to Google it, it's called a three-gap play, and it's just that. You see three huge gaps on big volume, and then the top is in, and normally that's the top forever in these stocks. They never, ever get back up to those highs again when they've moved like this. I don't know how many of those stocks in the dot-com bubble are still around. Maybe I'll look for them tonight in examples, but they were all doing this, all of them. They were all going from, $20, $30, open $50 the next day, trade out for $50 for 2 weeks, open at $70, $75 one day, trade out there for a little while, open at $100, open at $120, and then they were back to $20 in a few weeks. And I mean, they were just. This pattern comes and is a great example of parabolic moves in stocks. So, is Netflix a good company? Yes. Does it justify any kind of these multiples? I don't think so. It's just too easy for other companies to come in, not enough barriers to entry. You just buy a bunch of servers from Amazon, just like they did, and start putting together your stuff. But I suspect that that deal from Disney is eventually going to sink them. But we may have a little while to go, on that. So don't be surprised if you have to wait through the rest of the summer before you get the next real good shot on Netflix. But when it comes, it's going to be one of these ones where you're going to get a bunch of money real quick, and you're going to want to take it, and that will be you're probably going to kick yourself forever. So if there was one where you were thinking about holding a short for an extended period of time, this would be it, but not now. Are you thinking this is going to roll over? I don't suspect so. It still looked like there was enough juice. I was watching this trade earlier today. Still too many people short.
Okay.
I mean, this thing started with about 50% short interest, and everybody, of course, got out of it, reshorted it, and when they quit shorting it is almost always the good signal, and that's almost always just infinitesimal volume. You'll see this thing gap up and see what do we got, like 4 or 5 million shares a day or something on this. See it gap up and see like 1 million shares, and see 1 million shares or 2 million shares for a few days, just going sideways. So that would be it. Well, we've got 2 callers today. Does that answer your question?
Yeah, thank you.
You bet. And we're going to Roger in Mount Vernon. Wants to talk about Netflix too, I guess. Are you still there, Roger?
Yeah, I am.
Okay.
Real quick, just for FYI maybe, I noticed both times with Netflix when they gapped up, it was on earnings. They had, and their next earnings date is July 23rd. So I'm thinking, what do you think about that?
I think you're fine. There's probably going to be a mass of people short out here. Now, remember, this is probably got the best stock manipulator on Wall Street at the moment pushing this, which is Carl Icahn.
Right.
And so would it be, there's no way to prove it, but I almost guarantee you that before this ever started, he went in and sat down in the office with Reed Hastings and said, I can get this stock price way back up to the highs, and you'll be able to sell out and walk out with a bunch of money if you just do what I tell you. And I have a feeling that's pretty much what's happened out here. No way for me to ever prove it. But you've got probably one of the supreme manipulators ever, and the guy that had enough cash to make it happen. Have you ever read Reminiscence of a Stock Operator?
I haven't. I've heard you talk about it though. So.
I can't imagine trading without reading that book.
Okay.
It's actually very fun. It's not. I enjoyed reading it every single time. I read it every single year. It's kind of spring training for me. But if you want to know great stock manipulators, how it's done, even back in the 20s and 30s, you can read basically how he did it. And a lot of people attributing different things to it, but well understanding how trading pools work and how stock manipulators work out here. But, I have a feeling that you could be right. Let's see, was earnings date.
July 23rd is the next one here.
Yeah, I was just looking. Yeah, I've got July 24th. I hope that's right. So it's probably in that range right in there. And normally they're after the bell. So you get a good chance to trade those things after them. But normally if we see a nice little gap up after that date and it goes sideways for a few days, you really don't see any additional push on it, that would probably be the first chance you have to come back in. If it doesn't gap up on that date or you don't get a huge $20, $30 gap up and above that 248, you're probably going to want to go back to the standard technical analysis ways of trading these. But I'm hoping on that because I think you could get a move from like 290 back to $100.
Oh.
So go ahead.
If it took out the previous high of 237.
I've got 248.85 you're talking about?
Oh, that was the high of that day. Yeah.
Yeah.
It closed at 243.
Right. It still had 248.85, which is what I would use.
Use the high number then. Okay.
I always use the highest number for that. And if you've noticed my charts on Tiger TV or in the Den, at the bottom it says volume labels are highest volume within 0.5% of the swing point. So not only do I use that, but if it was a nickel cheaper the day before and volume was 8 million shares and it's 4 million shares, I use the 8 million shares. I'm always very conservative by using the highest numbers and looking at that instead of using the lowest number. If it just went a penny higher, I'm still looking at the highest dollar amount, but also the highest volume within 0.5%.
Okay, so we have to be over 4 million then.
Yeah, I would say that's probably not going to be a problem too if we're looking at that options or we're looking at that earnings date. July 24th and 25th. Let's see what that is. That's it's going to either be a Wednesday or Thursday, so you got plenty of time to trade that before that weekend. But yeah, I think you'd probably earnings, and it's up there at 290 or something. I'll be there pulling the trigger.
Okay. Well,
probably buying options because they're kind of probably going to be dirt cheap that day too. You know, when they pop up that first day, those options are going to just be absolutely creamed. And that's the way I would be playing this. I'm going to hope that thing gaps up. I'm going to hope you get a couple of days of sideways movement, and I'm going to buy some way out of the money puts on Netflix as far out as I can go.
I understand. Yeah. Okay. All right. Well, I was just curious because, you know, we're looking at this, the way these gaps are playing it, and then, you know, always on earnings date, you know, or at least the last two. So.
That's because everybody shorts it thinking it's going to fall apart on it. Probably do the exact same thing again. So if it gaps back up, and you probably have Icon will be pushing that pretty much all the day, and even after hours because he's going to be there. But what you want to see is very, very light volume, even in the after hours, even in the trading over the next couple of days, meaning that no one cares anymore. The shorts have given up. The longs know that they've got a stock that's probably going, and everybody's going to be rushing for the door. When you get that and it hits perfectly, these stocks can fall apart faster than you can shake a stick. And it hasn't done it yet, but this is about as good as it gets. And like I said, saw so many of these around 2000 in the .com bubble where these things would pop up, and they work extremely well when they do come in.
Yeah. Well, there's still a lot of shorts in this stock.
Yeah.
So.
Yeah, and I think we're going to get our next read on shorts this Friday, still at 20-25% on this thing.
Yeah.
I want to thank you for the call. We'll be back to wrap up the show in just a few minutes.
Thanks, Dave.
Are you looking for a decision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And Now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back here, hopefully. I was rudely interrupted by the Internet. How could the Internet do something like that to me? I just wanted to wrap up the show today with a small discussion. We talked about Reminiscence of a Stock Operator, and that is probably the best investment book when you talk to everyone in the Wall Street community. If there was one book that they say that they could not do without, it is that book. It's a thinly veiled biography of a big trader on Wall Street. He's best known as being a short operator, but he set up many pools long before there were laws against it. He was manic depressive when he was on the straight and narrow. He could make as much money as anybody else. When he was manic, he could not throw it away fast enough. But it's a really interesting look inside the mind of a trader long before there were a lot of rules, long before there were any computers, and just how you thought about things. Kind of interesting, the pace that these guys worked on. He's most famous, or he was most famous, Jesse Livermore, for making $300 million and about 3 months in 1929 on the crash. He was almost always right on the short side. He held many long positions. He was probably, although people talk about that $300 million he made on the crash of the stock market in 1929, actually made a great deal more money over the years as a commodities trader. When you think that he was able to trade in a universe where there were only 200 stocks, commodities were the big thing out there, and pretty interesting. He had a lot of his best buddies. They also used to pal around in the wintertime down in Miami, had their boats and stuff. But if there was one book you should read, it is Reminiscence of a Stock Operator. I want to thank everybody for tuning in, and we'll catch you tomorrow, same bat channel, same bat time.